Good morning, everybody. It's the 29th of June. We are Signal Centre Talking Ball. I'm Joe Neighbour, joined by Steve O'Hare. Morning, Steve.
Good morning, mate.
How are you doing?
Yeah, well, sort of just started to calm down after the goal glut yesterday.
What a couple of games that was yesterday.
Yeah,
Absolutely brilliant.
yeah, it was, wasn't it?
Yeah.
Odds of 2-3 all draws yesterday on Betfair was 10,000 to 1,
Wow.
and 4 people had that bet.
Wow.
Yeah. So, yeah, that's pretty impressive.
Yeah, indeed. Yeah,
Little,
cracking. And another big tournament favourite knocked out the competition, which makes it all very interesting. Of course, the big one tonight, England versus Germany, one of sport's biggest rivalries. So feeling pretty excited about that.
yeah, I mean, it just shows you actually yesterday, France getting beaten by Switzerland. Any team can beat any team.
Yep, absolutely.
If they play as a team like Switzerland did and really play for each other, you've got a team full of individuals in France who are phenomenal and by far, pound for pound, player for player, probably the best team in the world.
Definitely. Well, they're world champions, so
Yeah,
we know that.
and they look even better than they did back then.
Yeah,
And so, but if you play against someone who really plays as a team, because then you sort of can come unstuck. A little
yeah,
bit of luck, and you're done. So yeah, England, I think probably are a better team than Germany at the moment. But again, you need to sort of produce the performance on the night.
definitely.
Fingers crossed. Need a little bit of luck as well, maybe.
Yep, absolutely. So 5 o'clock tonight, we will be. Yeah, so don't contact us from 3 onwards. I'd say if.
Yeah, exactly. And
Yeah,
if you own a German car, don't leave it out on the street
yeah. Don't
either.
drink any German beer while watching football. Right, okay. So on to the news. So UK is facing a series of renewed restrictions for travellers amid concerns about the Delta variant of coronavirus. Portugal and Spain, although Portugal was on our green list, and certain parts of Spain, they've now imposed new curbs on UK visitors, and Germany is pushing for a more coordinated response from the European Union members in order to attempt to prevent the strain from taking hold in the bloc. So where we could go to some of these countries, we now have to quarantine for 2 weeks once there if you're coming from the UK. Hong Kong banned a passenger flight from the UK too. So obviously this is becoming more and more of a concern. My daughter's school yesterday, year 8, she's year 7, were all sent home and now working from home because of a big rise in cases. So, it is everywhere by the looks of things.
Yeah.
Which isn't good. And if it's doing that when weather's, temperatures are mild, if it's still around come autumn time, then we could be in for more trouble. But of course, we are trying to get these restrictions lifted, and the chat coming out of the government is that they're still planning to go ahead with this, but it doesn't look great at the moment. I wouldn't have said.
No.
Okay, the deal over the infrastructure plans that Biden's trying to put in place seems to be gaining plenty of attention. Looking to get that pushed through if he can. Bit of spat over the post-Brexit fishing rights, trying to get that sorted. The transition period for the French vessels was extended by Jersey. We've seen US banks boosting payments to shareholders after the Federal Reserve stress test last week, all of them passing pretty well due to the restrictions put in place because of the coronavirus pandemic. So Morgan Stanley is doubling its payout and plans to pay out as much as $12 billion planning $12 billion in stock buybacks as well. Some interesting things we'll come on to in the chart shortly about the skew index. But I'll leave that till the end, and I guess we've time to get stuck into some charts. Steve, what are you seeing today?
Yeah, I've got some sort of 16 unbelievable facts about investing and finance. I'll show you them at the end as well. I'm going to talk cryptos, baby. I've done a video on this. It's available on YouTube channel. Have a little look. Really sort of like looking at 4 this week: Bitcoin, Ethereum, Ripple, and Cardano. The main highlights of that video we look to be forming a bit of a double bottom on the Bitcoin. So for me, this is very close to being positive. I haven't been positive on Bitcoin for a while now. I was being short of this for a while, just below 40,000. My stop is down here now, 35,500. So I'll take a little bit of profit on that. But it feels like we could have a potential uplift in the coming days. It's not just on Bitcoin that we've seen this, it's across the range. Maybe Ethereum that is the one that really sort of showing it, but we'll stick to Bitcoin and walk through it. Double bottom neckline coming in at 35,517, a break of there, and we should see an extended move higher. 41,000 is the resistance level, and the line in the sand that we have to cross to sway me from continually pounding Bitcoin. We're broken up through the 4-hour Ichimoku cloud, so that's a positive. We've just reacted from the 35,500. You can see in the last half an hour, really. But this is a 4-hour chart, and this closes at 9 o'clock, and we'll get a new little candle starting here. But really need to close above that 35,517. Ethereum is already above it, the neckline of the double bottom. That's broken, 2045. The measured move target is actually up here, 2,385. But we do have interim resistance coming in at 2,278. So that's off to a bit of a flyer and leading the way on the cryptocurrency side of things. Above the 4-hour Ichimoku cloud, and this resistance now turns into support. So even if we do get a little bit of a swing back, potentially buying at 2045 with a tight stop would be a good risk reward play. Ripple is the one that I'm not so sure about. This is struggling compared to the other three. It's in the Ichimoku cloud. It's this ascending triangle formation. Still got a bit of a way to go. Really has to break that 70 level, and a close above there would then give me the confidence to say, yeah, we're going higher. Volumes are dropping down or moving lower as we're moving higher, so that again, bearish divergence there. It doesn't sort of like seem to be the same elsewhere. Cardano, again above the Ichimoku cloud. So for me, that's a positive. Bit of sideways congestion, and really support coming in at 130. Below that, we've got 120. Really, I see a break at 135.80 will lead to an immediate attack on the 139.90, and that looks pretty positive. So yeah, I'm positive on cryptos. You know, you thought you'd never see it, but I've fooled you all. So looking at oil on the weekly chart, as we have been talking about for a number of weeks now, we're in the fifth and final wave of this impulsive move higher. And if we break, daily chart yesterday was pretty ominous, bearish outside candle on the oil, and a little bit of a reaction higher this morning, but under a bit of pressure. Looking at the 4-hour chart, this is above the Ichimoku cloud. A little bit of indecision here after the sell-off that we've seen. So potential for another sort of head fake, maybe. It's looking positive at the moment. So again, risk reward basis, not a bad idea to get long here. Might even do that for the talking bull, the gun to head challenge if it's still there when we get round to it. This is my gun to head challenge yesterday. We've seen the gold in this bearish flag formation, and it broke lower, so I think it might have closed on side again. That for me is looking pretty negative gold at the moment. A break of 1759 would lead to a real attack on the 1755 support, which opens up a move to 1723. On the upside, really need to recapture ground above 1800 for me to, but even then, look at the size of the resistance in the form of the Ichimoku cloud. Pretty strong there. Now let's look at indices. Indices looking pretty positive. Again, we had a bit of a reaction lower overnight and reacted higher this morning. So from about 7-8 o'clock, we've seen a positive move in all the indices. FTSE forming a nice bullish engulfing candle from the support of the Ichimoku cloud and this other swing low at 70.60. It's stalled in front of there, so that's looking positive. Again, look at this nice, lovely, juicy candle on the DAX. On an intraday basis, we were actually looking to sell this, very close to getting stopped out already on that. Really, a break above the 15,676 is positive. A close above there on a 4-hour basis, and I expect a move higher to continue. Dow Jones has broken through the Ichimoku cloud, broken out of this channel formation that was down after head faking us down here. And again, we're looking at 34,530. We had a decent sell-off yesterday, under pressure for most of the day, but support seems to have held around about 34,200. So that's looking good. NASDAQ just keeps going on and on and on. So let's get 40,527 punches to another all-time high, same as the S&Ps yesterday, coming in at 4,293. So again, nothing really slowing these bad boys down. I don't know what to say about it. The China 50 still under pressure. This is the one that I still believe will lead the way when we do come to maybe just slow down, not even reverse, just a little bit of a hiccup. But we'll wait and see for that. Pretty much done there, Joe.
Nice one, Steve. Thanks. Okay, let's get on to FX then. So dollar index is the starting point. That's on the front foot today, up by 0.12% as it stands. And as we've been talking about, following the break of this long-term downtrend, we've seen a pullback and we've seen some support emerge just in front of the 91.43 level. Yesterday we saw a positive day and we're backing that up again today with a further push to the upside. So all looking pretty good for the dollar index, and still of the opinion that this will be moving higher in the short term as investors move back to the dollar index, having been shunning it really for a number of months. And obviously this is having a knock-on effect on all other currencies. This is euro dollar. We saw a big move down here through support at 119.85. We saw a mild attempt at a rebound to retest that level, and it's failed. A number of sort of long-legged or shooting star doji type candles that were posted there, and over the last 2 days we've seen further selling. So still of the opinion that this is heading lower and something more sinister is building. This is the daily chart, and there is a potential big head and shoulders top forming on here. So it needs to break down below this blue line to confirm the pattern. And as I've said previously, I'd prefer to see it break through this horizontal line at 117.04 to really confirm that top pattern is actually in place. In terms of the measured move targets on the downside, then over the medium term, we could be looking at a move down as deep as 110.56. So the outlook is looking increasingly positive for the dollar, and obviously increasingly negative for anything linked to the dollar. Let's have a look at Aussie dollar. That's quite interesting. For me, this has already formed a top when it broke through that support level there at 75.32. Over the last couple of days, we've seen what was a bit of a retest. It's probably overshot the neckline that formed, but we posted this shooting star candle here on the 25th of June in front of this resistance level at 76.45. And over the last couple of sessions, we're beginning to roll over. So maybe a bit of a flag pattern, actually, you could argue, has formed here. And now we are breaking below that and starting to head lower for the next wave to the downside. In terms of the ultimate target over the short to medium term, looking down here at 70.57. So much more downside, I think, is potentially on the cards here. Similar sort of situation for New Zealand dollar, US dollar, although we didn't see quite the same looking breakdown here. There was a breakdown and a close below. And again, a bit of a retest, but we are rolling over again to the downside, potentially, again, a bit of a flag pattern and further prices or further downside looks likely for me on this. Cable, again, that's sort of rallied into a retest of this what is now resistance at 139.85 and seems to have failed, and we are seeing prices continue to move lower. So the next target is this swing low that we posted on the 21st of June at 137.86. If we break this pattern here, then I think we formed quite a nice looking double top pattern, and we can start looking at prices down here at 130.97 as the target over the short to medium term. So interesting things happening. I think there's more strength to come for the dollar index, and it is obviously going to have a knock-on impact on all these currencies linked to the US dollar. The other thing I wanted to mention, which isn't currency related, was the SKU index, the CBOE SKU index. Let's just get the line chart up. So this is a daily chart, and as you can see, it's had a big push to the upside. Now, this is an indication that, well, what this does is it tracks the cost of tail risk in equity protection. So the risks of a big pullback in equity markets, essentially. And if that's being pushed higher, it doesn't suggest that a correction's imminent or anything like that, but it suggests that more people are thinking that a correction may be coming, and therefore they are starting to take protective measures and starting to defend effectively against a big move in markets. Now, this reached its highest level that it's been at, certainly since my chart begins, and that goes back to 2012. So quite a significant move, clearly, on that. What are your thoughts on that, Steve?
Yeah, I mean, it is. It's I think it's decision time, isn't it? Everything felt like a bit of a mess a few months ago, really, and now we're getting sort of like some serious sort of shifts in sentiment, and yeah, I think that's I like it a lot.
It's just a bit of a, maybe there will be a bit of weakness ahead, and if you are sitting on massive profits because of this huge move that we've seen in equity markets, then maybe you want to think about trimming some back, maybe.
Yeah, well, the funny thing is, Joe, I've got some unbelievable facts which I could share with you now if you're ready for them.
Yeah, go on.
I got these from a wealthofcommonsense.com, a guy called Ben Carlson. It just sort of like highlights sort of over the sort of like the periods, the sort of like long-term periods, returns, maybe the things you wouldn't expect. So, for instance, the period ending in March 20 saw long-term bonds beat the US stock market for 25 years. You wouldn't have thought that, would you?
Definitely not.
From the spring of 1996 through March 2020, long-term government bonds returned 8.2% annually versus a return of 8% per year for the S&P 500.
And the risk levels are substantially different there as well, aren't they?
Yeah, they did so with 1/3 less volatility. Most of the time, stocks beat bonds over the long term, but not always. And in its 45 years of existence, the Bloomberg Barclay Aggregate Bond Index has just had 3 down years, and those 3 losses were 3%, 2%, and 1%. That's 93% of all years with a positive performance. The annual returns have been 7.3%, with just 5.2% volatility, and without a single loss of more than 3% in a calendar year.
Stick your pensions in that.
Yeah, a bit late now. It's sort of too late for it now. Now we've got it sort of like inflation and everything. Again, real housing index. It's sort of like flat more than 100 years. So from 1870 to 1975. There was also things I did see. I think the Marketeer. I get an email from the Marketeer, which is a pretty cool email. Talks about a lot of good stuff, and see if I can find it now. Gets to, let me just have a little bit of a look, and some of the things that he sort of like says is pretty cool. This is the marketeer.com. Interesting. A quick summary. The first 2 weeks of July are the best weeks of the year. We are here. S&P is just starting. If you look at seasonality patterns since 1985,
Good year.
we are here. And July, look what happens in July. So are we at the cusp of exposure in the FANGs, FAANMG, is close to record lows. Wow. Wouldn't have thought that, would you?
No.
There's the FANGs. Relative exposure to FANG is near the lowest on record. Average mutual fund underweight by 555 basis points.
Wow.
That's pretty.
That's all the retail money and propping it up.
Yeah. And look, this is where we are. From a seasonality perspective, that's where NASDAQ is. Is the NASDAQ rally over? Doesn't feel like it, or doesn't look like it.
But
So
then you got this other stuff like the skew index and
yeah.
Yeah.
So yeah, thank you to the marketeer for
market
that.
here.
Marketeer, I like it. I like the play on words.
Yeah. Yeah, that's really interesting. Okay, so plenty to consider there. I mean, obviously, markets are always changing and always doing new things to surprise us. So who knows what's going to happen?
Yeah,
that's part of the fun, I guess. Right, so gun to the head challenge. Yesterday, Steve, you mentioned that you did hang on to your trade yesterday on gold. So you made 3.3 ticks or 0.35 R. That'll do.
That'll do, Donkey.
I had a 0.6 R win on Aussie dollar. So wasn't much volatility around yesterday due to the lack of economic data. But 2 wins nonetheless, just under 1 R locked in. So what are you fancying today? You've suggested oil might be something you were fancying.
Yeah, it is basically between oil and gold. Now, oil has had this sell-off, so it's a little bit bearish. Gold is, I'm going sticking to my guns, getting in. Obviously, had to get out last night, but hey ho, that's the way it goes. Yeah, and getting in now, 1769. Stop at 1790, quite a fair stop. Looking to target 1690. Yeah, why not? 1690. 1676 is the real support from back here from March. So yeah, 1723 interim support, but really has to break this 1755 level for this to play out. So could I bring my stop down a little bit further? Yeah, let's have a $10 stop again. So my stop's at 1780, getting short at 1770, targeting 1690. There we go. 8-1.
Okay, lovely. That's massive. Right, I'm going to take a look at oil. I quite like the setup here. I think the trend clearly is bullish, as you can see here. This is my hourly chart. In recent hours and days, we've seen the price move sideways a little bit, but some support seems to have formed here around about 72.24 down to 72.10. Over the last hour, we've seen a nice push above the 10-period exponential moving average. So for me, represents a nice opportunity to get long. Going to buy at 72.54. Going to target a move up to the swing highs that we saw at 74.10 with a stop loss just below the lows that we've posted over the last few days or so at 72.05. So that is 3.2 R if successful. We shall see.
Nice one.
Okay, the calendar is pretty light today. So we've got Euro area confidence data and the latest update on UK house prices, which is already out. We've also got Christine Lagarde speaking at the Brussels Economic Forum, and her words are likely to be scrutinised amid a policymaker split on the way forward. So we'll be interested to see what she has to say. Other than that, there isn't much else out. All focus on 5 p.m. for the mighty England versus Germany. Come
Lovely.
on, England. Cool. Anything else, Steve?
No, that's it. Just don't mention the war.
No. Right. Have a great day, everyone.
All right. Cheers. Have a good day.